Welcome to a Real Estate Wisdom Podcast with Vish, your go-to podcast for the latest trends and analysis in the Greater Toronto Area housing market. I'm your host Vishal Kapoor, and today we're diving deep into the November 2024 market report and exploring the factors shaping our real estate landscape. So grab a coffee and settle in for the next few minutes as we unpack the data and trends that matter to you. Let's kick things off with the headline news. The GTA housing market is experiencing a remarkable resurgence. In November 2024, we saw a staggering 40.1% year-over-year increase in home sales. And this isn't just a small uptick. It's a significant shift in market dynamics that demands our attention. So, what's driving this surge? The answer lies in a combination of factors. As we always know, lower borrowing cost. If you can't afford something, you're not going to buy. Well, after a period of high interest rates, we're seeing a trend towards more affordable mortgages. And this is acting like a magnet, drawing buyers back into the market, which is a good news for sellers and good news for the market as well. Many potential buyers who had been sitting on the sidelines are now jumping back in, sensing an opportunity in the changing market conditions. And I think what they're thinking is it may be too late, or prices started rising again. With prices having cooled from their peak, some properties are now within reach for buyers who were previously priced out. Price trend. A tale of two markets. So now let's talk about numbers. The average selling price for a home in the GTA this number was $1,106,050, making a 2.6% increase from last year. But here's where it's get interesting. Detached homes. This segment is seeing price growth above the rate of inflation, especially in Toronto proper. Condos, in contrast, apartments are still experiencing lower average selling prices compared to a year ago. So within a year, condo market have gone down a lot. And so which affecting, I think, investors, landlords. But this divergence tells us that a market recovery isn't uniform across all property types. Buyers are showing a preference for more spacious homes, possibly a lingering effect of the work from home trend that reshaped our living preferences. So a lot of people taking that advantage as well, or taking advantage on upgrading from a smaller house to a bigger house, because their house, if they're selling or keeping it, it's a good time to upgrade. So they're recognizing that. One of the most significant factors influencing our market is the interest rate environment. So let's break it down. What's happening in interest rate market? Fixed rates. We've seen a recent uptick in fixed mortgage rates following the trend in bond yields. And this has caused some buyers to accelerate their purchasing decisions to lock in rates before they potential rise further. I know CIBC have started with 20 basis point, then RBC and TD also follow the suit. So all the big banks are looking into that. That's also they have to meet the target for this year. So end of the year they are doing this, right? The Bank of Canada's overnight rate, which influences variable mortgage rates, has remained steady at 3.8% as of November 2024. And this stability in variable rate is providing an attractive option for some buyers. I know affordability is still the issue in big segment. The interplay between fixed and variable rate is creating an interesting dynamic in the market. Buyers are carefully weighing their options, with some opting for the certainty of fixed rates, while others are betting on variable rates remaining favorable. So there's something for everyone. Some things suit for you, some things suit for others, depending upon what your comfort level is, right? Supply and demand, a tightening market. While sales have surged, new listings haven't kept pace. November saw an increase in new listing of 6.5% year over year, significantly lower than the 40.1% increase in sales. And this imbalance is leading to what? Tighter market conditions, of course. With demand outpacing supply, we are seeing increased competition among buyers, especially for the good houses. Not all the houses, not all the neighborhoods, but we're seeing some. Upward pressure on prices, and the supply-demand imbalance is contributing to the overall price growth we are experiencing. Policy announcements and their impact. Recent policy announcements are also shaping our market. The biggest one is landlord and tenant board reforms. We really need that. And there's a push for faster, fairer processes at the LTB, and this could have significant implications for both landlords and tenants, potentially encouraging more investment in rental properties. We really needed that because a lot of landlords, lots of investors were leaving, and it's a time. It's a little too late, but I will say it's still the time. Housing supply initiatives. Various levels of government are implementing policies to increase housing supply. While these will take time to materialize, and they are expected to help balance the market in the long term. We need that. We need on the war scale. We need to get this done because I don't know what's going to happen. Like a lot of immigration is going to happen from U.S., I believe. So as we wrap up 2024 and look towards 2025, here's what I am anticipating. Continued recovery. With prices still off their peak and mortgage payments trending lower, we are likely to see sustained market activity. We're going to see the growth, but it's going to be a little slow, which is okay. Like, in any market, we don't want to see that 2021, 2022 increase, right? Shift in rental market. As more renters transition to home ownership, we might see changes in rental demand and pricing. However, strong population growth is expected to maintain overall rental demand. Rental is going to be there, depending upon what type of houses we're doing it, right? Regional variations. Remember, real estate is local. While the overall GTA trend is positive, specific neighborhoods and property types may perform differently. Different segments we can see and different things are happening. Interest rate sensitivity. The market will remain highly sensitive to any changes in interest rates. So keep an eye on Bank of Canada's announcements and bond yields for clues about future mortgage rate trends. So what are my closing thoughts? Well, the GTA real estate market is showing strong signs of recovery, but it is a nuanced picture. Detached homes are leading the change, while condos are offering opportunities for first-time buyers. The interplay between fixed and variable mortgage rates is adding an extra layer of complexity to buying decisions. So what are you thinking? Are you going to make a move in 2025? or you thinking about it, I know I'm getting a lot of inquiries from people and they're looking at different options. As we move into 2025, stay informed about policy changes, keep an eye on interest rate trends, and always consider your long-term housing needs when making decisions. Remember, whether you are a buyer, seller, or investor, knowledge is power in real estate. So keep watching, stay informed. That's all for today's extended edition of Real Estate Wisdom with Vish. Until next time, keep your eyes on the market and your feet on the ground. This is Vishal Kapoor signing off. Bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.